What is a reverse mortgage and how do they work? Well, a reverse mortgage is the exact opposite of a forward mortgage. Although most people don't know that term, a forward mortgage, they just call it a mortgage. Now, a lot of seniors cannot understand the concept of a reverse mortgage. They've been taught all their life that the lender puts the money out and then you pay back for the next 30 years or the next 15 years every month to the lender. In this case, it's the exact opposite. The lender is going to pay you. And I'm going to show you how that works. For starters, I'm going to give you the benefits over here of a reverse mortgage. Okay, number one, the reverse mortgage has no more payments. Right now, if you're making payments and you have to think about it every month, that's one issue. But if you're not thinking about it and the bank's paying you every month, that's a much different thinking. Number two, all the debts will be paid off. You might have a car loan. You might have credit card loans or any kind of loans out there. You can pay those off with your reverse mortgages and now you don't have the payments anymore. How do you receive your money? You can receive your money with a lump sum or monthly payments. Most people I know get their money in a lump sum. You never know when you're going to die. If you get your money today and you die next year, you've received all your money. If you die next year and you're getting monthly payments, you've only picked up 12 of your equity, 12 payments wise, and you're leaving equity for somebody else. Usually they leave the equity for the kids, and then the kids blow the equity immediately after you die. Okay, the money is tax-free. Why is the money tax-free? It's already your money. You already have it in the right pocket. Now you want to take it out of the right pocket and put it in the left pocket. So since it's your money, you don't get taxed on money you already have. Next, does it affect Social Security? I get asked this all the time. Does it affect Medicare? Does it affect any other private benefits? And the answer is no, none at all. So you shouldn't even be thinking that way. Okay, when do you repay the loan? You repay the loan either A, when you sell the house, B, when you move from the house because it's an owner-occupied loan, or C, when you die. And when you die, you have 6 months, your heirs have 6 months to pay it off. If they don't pay it off in that 6 months, you got another 6 months to pay it off after that. You get an extension. So I'm looking at it like you basically have a year to pay off the loan. Okay. What limitations are there on the loan? Let me come over here and point these out to you. Number one is you have to be 62 years of age. Okay, can't do it at 52, can't do it at 42, although everybody like to have no payments. But you have to be 62 years of age. Next is, how much can I receive? Well, you can receive the money based on the fair market value of the property. What is the fair market value of the property? Well, I don't know that because you have to get an appraisal on the property. When you get an appraisal on the property, now we will know what the fair market value is. And in this instance, FMV, for all you who do not know, that stands for fair market value. Okay, another thing that's going to be is your age. You know, are you 62 or are you 89? You're going to get more money if you're 89 than you are at 62. Okay, and the interest rate. You're going to get more money at a 3% interest rate than you are at a 6% interest rate. Now, you must pay your property taxes, your property insurance, and your utilities, just like you do today. You will pay your own property taxes every year. If you don't pay them, after a certain number of years, it'll be deeded to the state. That's no good. So anyway, you still got to pay all the debts that you have to pay now, except a mortgage. A HUD-approved counseling source. When you fill out the application, you have to go get a HUD-approved counseling session. They take about an hour, but every single person that gets one has to go through it. And they're explaining to you how you are not paying off your equity on the house. So that's why you have that counseling session. Next, your equity will be going down instead of up. That's because you're living off your borrowed money. Okay. Now, people ask me, can you buy a house on a reverse mortgage? And the answer is yes. In 2009, Congress passed the home equity conversion mortgage for purchase laws. Before, you could not do that, but you can now. Now, what do you do to qualify? Well, of course, you got to be 62. But the loan to value is going to be 47% to 52%. Why is that? You have to have equity there because the mortgage is growing. It is not being paid off. Okay? And the exact amount of your loan will be determined by how old you are, your appraised value on the property, and your initial mortgage insurance premium. That has to be paid up front, and it is a large number. Usually it's like $16,000. So you got to be prepared to pay that though. Now, who comes up with the rest of the money from the loan to value to the purchase price? You come up with the money. That is the down payment that you will be using. Where do you get the down payment? There's numerous sources. The first one is you can get your down payment from retirement benefits. If you pull out your money out of a 401k or something like that, you will not get taxed on that. You get to use that for your reverse mortgage and buying the house. The gift money, you can, on FHA loans, you can get gift money for down payments. Now in this case, it's a hefty gift money because it's about 50%, but you can still get it that way. And next, you can take the money out of savings. If you have savings and you have enough money, therefore you can go that route. Use your savings as the down payment. Anyway, that's reverse mortgages in a nutshell. I'm Floyd Brown, and if you need to know any more information, you can go to my Facebook page and check out all the stuff there.